How are you? Let me go into the comment section. If you're here right now, my voice should sound pretty clear because I fixed whatever was going on with my mic. So you guys all good? You hear me okay? All right. Yes, he has, John. Yes, he has. All right. Okay. So show of hands. If this is your first time on a call with me, type in the chat because I like to get the chat going early. If it's your first time on the chat with me, put in a number 1. If it's your second time, it's put in a number 2. If it's more than the second time, just put in the number 9, even if it's only the third. So 1, 2, or 9. Yeah, that's working, Joe. That's funny, though. Okay.
There we go.
Is the sound working or no? Are we good? Was it not good before? All right, good. All right, everyone type something in. I like to see all the people here. Peter, Nish, Augusto, Joe, John, Johnny, Ron, Mel, Jay, Rick, Gene. There we go. Thanks, man. All right. I appreciate it. Thanks, Blair. It's weird. I grew up on a trading floor. I like the camaraderie of all of us being here, and it makes me feel good when I hear you. Hey, Scott, how are you? Thank you. All right, perfect. All right, now we go. All right. Okay. By the way, nobody typed in the numbers though. If you could, I'd just like to know because if it's your first time on, I'll explain a couple more things. If it's more than your first time, then I could go a little bit faster. So just give me a number if you don't mind. Everyone who typed in. Just is this your first time on a call with me or more? You can just do 1 or more. Keep it simple. All right, good. Got some first timers. Some more. This is good. I like this. All right, ready? Now I'm going to get into it. That's all I needed. I got a cool presentation for you. Trading's going well. Market's certainly an interesting time. Got Jay Soloff here, which is awesome. Jay, what's going on, man? Thank you for coming on. Let me just bring you in right away. How's everything going with you?
It's going well. Thanks for having me. As always, you can hear me, I assume. Just double checking.
You sound. Who sounds better, me or Jay? Because Jay sounds really good. If we're equal, I'll take it. Are we at least equal? Are me and Jay equal, or does he sound better? Because I love the way Jay sounds right now. So, are we even?
I certainly have a sexier voice. I mean, that goes without saying. Yeah.
All right, I'll take it. Yeah. Okay. All right, everyone says we sound good. So, I'm the only one on camera. Jay's not on camera, Blair, so it's an unfair fight.
Adam's definitely better looking than I am. So
he wins by not showing up. So let me just see. Jay, what have you been doing in the markets?
Pretty much the usual. I'm a short volatility guy. Rarely do I ever put on long positions. So it's been a little bit more interesting lately with the added volatility. So timing has mattered a bit more, which you can chalk up to sometimes luck, sometimes better signaling, but certainly some things you can't predict, some things you can. But I like to sell options. I like to do cover calls. I like to sell puts. So the added volatility has been good in terms of finding better premiums, but certainly it adds a layer of risk to the equation as well.
Yeah. You and I are very like-minded, which is a good thing. I appreciate that. I mean, it was pretty interesting though. Let's just talk about the last 2 days. Yesterday morning, early on in trading, it looked like the markets were going to fall off a cliff. Everything looked weak. They were selling the open, really coming off hard. And then the reversal was like almost like there was like a midday Fed rate cut or something. The Qs got down below 451 and they finished at 468 yesterday. And today we still had some carryover. Just wondering, did you find that move to be a little irregular? What'd you think of it?
Yeah, I mean, it's always weird heading into a presidential election, right? Because I feel like you have a baseline of volatility that's going to exist. And then a lot of times nothing will happen. So then you layer on the added stuff with interest rates, which is the big thing for this month. And so you have these big moves that are short-lived related to, well, is the Fed going to cut rates more? Are they gonna wait? Are they gonna, what are they gonna do? And anytime some economic news comes out, the crowd is quickly selling or buying quite a bit, and then it kind of drifts back to the middle. And I think some of that is because you still have this big kind of thing happening in the future, this election that's happening in November, which is now what is 3 months away, whatever, or 2 months. And people try to like balance, well, I need to make sure I'm prepared for that, but I have all this economic news. And I feel like it's making the market kind of scatterbrained, with a higher baseline level of volatility. So, I mean, that's a very generic answer to your question, but that's kind of what I've been seeing with these moves, is that they tend to be pretty short-lived because the market doesn't really know what to think right now.
Yeah, I mean, it feels a little bit like the market overall is just trading like a stock. That's what it feels like to me. We've been doing well here. I'm going to talk about that, but I do have one major contrarian indicator, and this is: did you ever have just a person in your life that's always wrong?
Yeah, my wife, of course.
No, I would never say that. I record. By the way, this might be being recorded. Be careful. No, we have this buddy around town that, like, if he says the Jets are the lock of the day, then the 49ers are going to destroy him. If he says Tesla's a short at 100, it goes to 800, right? So he texted me today and he was like, for the first time in my life, I just pulled all my money out of the market. And for me, that's a major contrarian indicator. I was going to lean a little bit bearish up here, but now I'm not. But no, that doesn't affect what we do. I don't trade based off those things. I'm going to show you all what I trade on, how I make decisions, what I've been up to, and I think everyone's really going to like it. So, I'll take the camera. Do you like the camera up or not? I'll take it off for a little bit, and then I'll come back on in a little bit. Is that all right? Do you want to see faces? Here, I could start counting again. There you go. There's my face. Okay. So here we go. So first of all, the number one reason I came back to live events, which I think is important for you to know. I started trading in 1998. Can you see me now or no? There you go. Okay.
Yeah, we can see you now.
I started trading in 1998. I was a day trader. Then I started a day trading firm with some partners. It still exists today. And I I was doing that for years, and my job was to train new people at the trading firm. Okay. And then there was a point around 2003 where the market was moving kind of slow. We weren't bringing in new people. And my friend said, hey, who would want to go on a reality show? I know the casting director. So me and my other buddy, this was 2003, we're like, we'll do it. I was told the show was called Life of the Party. And I thought that sounded fun. So I like filled out all these forms. I went on, and it turned out to be, this is just a crazy story I'm sharing with all of you. It turned out to be a dating show. Okay. I didn't know it, but I signed up for a dating show without knowing I was going on a dating show. And it was called Average Joe, where average guys are going for Miss Missouri. And they got down out of 20 guys to the final 3. And when there were 3 people left, they brought in 3 male underwear models. And in the finale, it was me versus one of the underwear models. Now, as they're filming all this, they realized I'd been there for 2 months. They never asked me what I do for a living. And I told them I was a partner in a trading firm. They're like, wait, are you like a good trader? And I'm like, yeah. And they're like, are you a millionaire? And I was like, yeah. They're like, why didn't you tell us this? I'm like, you didn't ask. And so they're like, we're going to go to New York. We want to see your trading firm. We want to learn more about you. So they fly the whole cast to New York, blah, blah, blah. And I had been written up in Fortune magazine, which I'll show you. They saw the articles. And this was on after Friends. And it was the finale of Friends, and the finale of Friends ever. And then it was the finale of my show. So because the lead-in was Friends, there were 30 million people who watched the final episode of my show. And NBC was showing me trading and all this stuff. And I don't want to ruin it for you, but it was a long time ago. I lost. She picked the other guy. And America was very upset. So I got my own show called Adam Returns. And when I came back, a big brokerage sponsored one of the episodes, and I taught the girls how to trade, and there was a trading competition. The winners got dates with me. I know this sounds like a crazy story, but there were so many people that saw me trading and knowing how to trade, and I got thousands of emails from people asking to learn how to trade. And I realized there was such a void in this area that I kind of just went with fate. I sold my interest in the trading firm, and I started a newsletter, and I started teaching people how to trade. It wasn't something I planned on doing. It was just kind of like life taking its course. And, one of the first things I did as I started to do this was go around and listen to other people that were doing this and just kind of feeling myself around. And I always wanted to just be on the cutting edge of what's working. So day trading was not, I wasn't able to teach day trading for long because, first of all, it wasn't as easy to be successful as other things, and it was getting worse. So we got into swing trading, and then in 2014, it converted into options trading because I was always trying to, show people the right way to trade. Okay. And so I've been doing options for the last 10 years now, as 11 years. And as I built it up, we've gotten one strategy into another strategy into another strategy. And then in 2021, a big fintech company came along and they bought my company. And so I sold it and I stopped doing webinars and I stopped doing all that stuff. And then at the end of last year, I was able to get it back, which was cool. And what I realized was I had a chance to do what I've always wanted to do, which was instead of having all these different services and all these different things going on, I wanted one community, one place where I could do all my trading strategies. And so that's what I created. So I was able to get all the things I love back, which is camaraderie with a big audience, the ability to make whatever trade I want, and kind of do it on my terms. So that's how we're here. That's the backstory. And now I'm in a place where instead of having like 10 different audiences like I used to have, it's one place where I do all my trades. Okay.
Yeah. So, and I see some people are getting anxious, but about getting to trades, but I think this is
Robbie.
important.
It's just Robbie.
No, just Robbie. Okay.
Robbie's very.
I think this is important, right? I think having a community is extremely important, and how you got there is important, because you don't just build a community overnight, and having a supportive community is really good for trading. Like, a lot of my, subscribers talk to each other and they come up with trade ideas that they then, they trade and make money for, with ideas from each other. I think it's extremely important. So, I think there's something to be said about backstory. Although I have to ask you, and maybe doing it in public is not the right place, but I have to know what happened to the winner of Adam Returns. Like, did you guys like date? Was there anything there, or was that just like all for show?
We for a little bit, but I actually ran into a Jingle Ball. We both took our kids to Jingle Ball last year, and I ended up sitting next to him and like reconnected. And it was funny because her kid was like, "Oh, how do you know him?" And she's like, "It's a long story," which is funny.
Nice.
But we're gonna get in. Yeah, we're definitely gonna get in strategy. Scott just said a great story. My oldest son is now trading at your old firm, which is awesome. Yeah, it still exists. Good group of people, and a great way to learn trading there. So, that's awesome. That that it all comes full together. That Scott's on this call and his son's at my old firm. So it's what it is. It's a real story, and I think everything we do is always genuine, and that's why I just want you to know where I'm coming from, what it's about, and where we're going to go from there. And this was just, I already talked about this, so I could go through it, but this was like, I got crazy exposure that led me into this industry and helping people learn how to trade. It was on the Tonight Show, Ellen, Regis and Kelly, all those things. This was the article that got it started. It's pretty cool because, it's interesting because Robbie said, oh, I just want to learn how to trade. But like, if you want to learn how to trade, don't you want to know who you're learning from? Like, I could be anybody. If I don't let you know who I am, right, then wouldn't you feel better learning from someone after you know who they are and what they're about and why they're qualified to explain it to you, right? Versus anyone just speaking. And that's the thing, Jay, it too. In our industry, there's a lot of good marketers.
Yes.
But you and I were traders first and foremost, and we're not on the marketing side. So that's why I think it's important to identify who I am and what my background is, because I think it's much more comfortable if you trust who's speaking to you, and that's like that. That's why I share this slide all the time. Like, the writer from Fortune magazine stood behind me and watched me make $20,000, and he did a whole article, and they did a follow-up article about how my teaching strategies were working, and I had all these consistent traders. And that's important stuff. It shows why I'm qualified to be here. Jay and I are both professional traders, and I think it's important that that's who you're learning from. So I'm never going to stop explaining who I am. And I would say to Robbie and anyone else, although Robbie's the only one that's saying get on with it, you want to be really aware of who's speaking to you and why, because I think a lot of where the information is coming from is going to determine your success. Okay. So after trading for stocks for all those years, a really good option trader came to me and said, with your ability to pick levels, you should try selling puts. And I had never done that before, but it was as simple as like when Starbucks was trading at 70 and it went to 72, rather than feeling like, oh my God, I should have had more at 70, you sell a 70 put. Okay. So Starbucks is trading at 72. I sell a 70 put for 67 cents, 10 contracts, $670. And what's that mean? It means if Starbucks goes up more, I keep that $670. If it stays at 72, I keep that $670. If it goes down, I keep that money. And if it goes below 70, then I own it at 69.23, which is 70 minus the 67 cents, right? sorry, 69.33. So I get it at a better price than before. So I love that idea. And so when I tell people my first 17 trades in a row were all winners, like, oh, how is that possible? Well, think about it. I was selling out of the money puts, trading below where the stock was trading and levels that I liked. So my chance that I was going to be correct was already 70 to 80%. So to go on a, let's call it a heater where you make 17 winners in a row is not that irregular. And one of the reasons why options is so appealing to Jay and myself is because when you're able to collect premium, it's like you're the house in a casino, right? The math goes in your favor, right? And you can have more opportunities to win. Okay. Which is really fun. And so when we're doing this and we collect premium on our trades, there's a good chance we're going to win often. Okay. So after we started selling puts, one of the things that happened was that people liked it. But, and Jay, I don't know if you experienced this or not. I'm actually curious. Let me go back because I want to ask this. When I teach people how to sell puts, the issue I got with that was that a lot of people didn't feel comfortable with the buying power risk of selling a put or the willingness to take ownership. And what I found was the large majority of options traders that I was working with did not want to own stock. And so I started doing credit spreads instead of simply naked puts because a credit spread contains it in a range. If it goes below a certain amount, you don't own it, and you could always close it beforehand. With your stuff, do you do both? Are you willing to take ownership, or do you have different services for each? Just curious what goes on with your stuff and how people have responded like that to you.
Yeah, I think that's a great point because I have the whole range of it as well. So what I found is that most people are trying to conserve capital, so they don't want to take ownership. And so I'll do cash secured puts on cheaper stocks.
Cheaper stocks. Okay.
Yeah, that way, so they could, if we're doing a $15 stock, you need $1,500 to do a put or whatever, or, whatever the strike is. You could do that you could take $2,000 and mess around and learn a little bit.
Yes.
And then ramp up with volume if you feel comfortable. Other people actually prefer to get assigned and then just wheel it and, sell calls, sell puts. And then there's also a group of people who will do credit spread. So I usually talk to each of these, and maybe not so much I've tried to get away from taking ownership and selling calls because, again, people say, now my capital's tied up and I can't do more trades. So usually if it's in the money, we will just close it, take the loss, move on. With a cheaper stock, it tends not to be. Obviously, there's only so far things are going to go unless the stock's going to zero. So usually the downside is pretty limited, but for riskier stuff, some people will use credit spreads for the reasons you're talking about. Very defined risk. Generally, you're not going to have to worry about owning it. But it tends to be a range. It's changed a bit over time. It used to be that no one wanted to deal with like margin accounts and that sort of thing. And now it's people are willing to take a bit more risk and take ownership. So it's kind of a cross section, but I would say if I had to pick one, people prefer to close and not own stocks.
Yeah. I just want to make sure it was similar. And I agree with you for cheaper stocks. If you could get in for a couple thousand or less, people are comfortable. It's just no one wants to be willing to own $100,000 worth of NVIDIA. That's what I've learned. Even a good stock like that, so if you're going to do it, you got to do it small. And the people who want to trade bigger can trade bigger, which is fine. Okay. So, all right. And then, so after we moved on from credit spreads, the next thing I got into, which not as many people do, is diagonal calendars, which is a synthetic covered call. And this is where you buy a long-term call or a long-term put, and then you collect premium against the position. By a yes or no, how many of you have ever done calendar spreads? Diagonal calendar spreads, not calendar spreads, diagonal calendar spreads, where we're in September right now. where you would go out and buy like a December call and then sell the weeklies against it. How many of you have done that, and how many of you have not? Thank you. No, yes, no, yeah.
Some of my people on here have definitely done them.
Okay. So, right. So a lot of people haven't though, right?
Yep.
And that's what I realized. And so diagonal calendars are amazing because you get the upside capital appreciation, and then you also could finance the trade so that you could own it at zero risk. And when you look at this last line, it says, depending on how the trade is structured, one can profit even when the direction of the underlying asset goes opposite from what is expected, or at least mitigate a potential loss. Okay. You could also get to the point where you own an option at zero cost, which makes your profit infinity. Okay. And this was an article by The Street saying it's one of their favorite strategies, although lesser known. And so not only do I do these, but I also do what's called a mesh trade, which is I took the diagonal trade, but instead I do it as credit spreads, Jay. So I'll go out in September and I might put on like a December bull put credit spread and then do weekly bear call credit spreads against it, which is really fun. And yeah, these are
low mesh trade. That's we need to get that like trademarked.
Oh, I've been in Tom Sosnoff's ear trying to get it as one of the options on the TC Trade platform. But I do love it. It works well. It's popular and very low risk. So the making of a diagonal calendar, it's made up of one long option and one short option with different months and different strike prices. So nothing's ever naked because if we have a long call, if we're selling a call above it, it's covered. Meaning like if you bought a call in GameStop and then sold a call above it, when GameStop had that crazy short squeeze, you wouldn't be at risk. You'd actually make money in that situation. Okay. So the characteristics of this trade are it's put on for a debit. It benefits from time passing. It benefits from increasing volatility. That line's important. Okay. It benefits from increasing volatility. Think about what that means. That means if the market gets riskier, the trade gets better. It's a defined risk trade, profits realized on closing the trade. Now, max gain becomes unlimited when you take the short leg off. The max gain is defined until you remove the option you're selling against it. Your max loss is the initial debit at the beginning of the trade, and that only goes down with premium collection. It is an interesting idea. Yes, Augusta, thank you.
Yeah, and just to clarify, because we've talked about this in terms of we like to call it a poor man's covered call, and because you don't have the capital needs to that you do with a covered call, but it is a different trade, and I talk about it as a covered call replacement, and it is that, but it's also more than that. And I think that's an excellent point about long volatility that I've tried to teach, and it's tough because there's just always so much to teach, and it's hard to remember everything. But these very far back months options have what is known as a really high vega. The longer out you go in time, the more vega, which is the amount the option will increase or decrease based on volatility. So when you own these long-term options, you make money when volatility goes up, and that back month volatility will go up more than the front month, right? There's not as much vega in the front month volatility. That's the different characteristics, right? But not vega. So we don't talk about that as much over with my services, but I think that's a really excellent point that unlike a covered call where you own the stock, where volatility is not going to help you because you own the stock, right? If you own the option, that is actually a benefit. So I think that's an excellent thing that differentiates that just from a covered call replacement.
Yeah. And the only reason I don't call it the poor man's covered call is this last line. Diagonal trades bring the best of both worlds, the ability to be an option writer, seller, collecting premium on a weekly basis, and at the same time have the chance for unlimited reward, making this the preferred strategy for the financial elite. So I think that it's it's something that the better traders do. So, and I think it is called a poor man's covered call or a synthetic covered call. That's not your expression, Jay. That is a term. Yeah. I don't like it because poor gets associated. I think it's a negative association.
Yeah,
I think it's smart. and so I never go that way.
The smart man's covered call.
Yeah, or I'll say synthetic. I'll go with synthetic.
I usually use synthetic. That's actually the way I like to talk about, because I don't like poor man's covered call either. It does kind of, yeah.
How about it's like you're buying someone jewelry and you get like the synthetic jewelry instead of the gold, so you pay $2,000 instead of $20,000, and then someone says, "Oh, I like your bracelet," right? That's what it feels like. So what's so great about the calendar kind of trade is that you get confidence because you have a long call and a short call. So no matter what, you're winning on one side. You could win on both. You can't lose on both. So it's a confidence builder because you're experiencing wins every week. You're disciplined because you know your risk is contained, so you're not going to average down or bail out on a trade too early. And because there's that premium collection component, you get paid every week, which is really nice. So I went over the components already. So let's just take an example of MU. This is one of just like, I built this slide just to show the math on it. So if you wanted to buy 100 shares of MU when it was trading at 41, then should have just held it because now it's 87. But this is a fun example. If you want to buy 100 shares, it would cost over $4,000, right? But if you buy a call, it's going to cost just $435, right? Now, the thing is about buying a call versus stock is then you're only owning it for a defined amount of time, okay? And in this case, it was like 54 days or something like that. But then what we're going to do is we're going to sell a weekly call against it for 70 cents. And here's how the math lines up. And this is what I wanted you to see. If you go out and you buy a call going 9 weeks out, which was like that 54 days, the cost of the long-term call is $435. The weekly premium collection in week 1 was 70 cents. Now, obviously, volatility gets increased. You'll be able to collect more. If it goes down, you'll be able to collect less. But let's say you're able to average 70 cents a week. That equals $630. So $630 times 100 shares is $6.30, which means that $630 versus $435, if the long call expired worthless, meaning the stock didn't move, you could still get an ROI of over 40% because of the premium collection. And that's what I love about it. Okay, one more would be Ford. Here's like a cheap, slow-moving stock. You could buy a long call, 10 contracts, $1.71, and then you could sell the weeklies for 36 cents. And look at it. You can make $3,960 off the original cost of $1,710 with an ROI of 131%. And again, this is if it goes nowhere. This isn't even figuring out the capital appreciation part. These are just on consistently collecting premium every week if the thing doesn't move. Now, you're going to have to change strikes and adjust because these things do move. But from the outset, it's a good plan. And then you can work off of that plan. Okay? And you could use this strategy even when you're venturing into new areas. I was actually on Fox with Maria Bartiromo when they opened the Bitcoin exchange. And we were trading options in Riot. And we kept rolling back the calls. We got in at 5 or 3. And we were rolling back the calls. And the reason I use this slide is because even though we got in at 3 and sold 8 calls, we were able to roll the 8 back to 9, 10, 11, and make thousands of dollars using this strategy without ever owning the stock, which is really cool. Okay. So, and I just want to, let me just see if I could do something. Yeah, I'll go off my screen. I'll share my main screen later because I like to go into my portfolio. I keep a portfolio of all my trades so you could follow along and see how we're doing. My favorite thing about this current strategy is that we could apply all different strategies depending on what the market gives. So in the past, I used to have all these different services, like I said, and it's kind of like a hedge fund, right, Jay? Like if you set up a long-only hedge fund, then you can't go outside your charter. You can't start doing options. You can't start shorting stocks. You have to stick with your parameters. So when I started building my services, I did one strategy at a time. So I would have a credit spread service, a diagonal service, a call put service. stock, some where we would take ownership of the cheaper stocks, like the wheel, like you call it, and sell calls against it. I would do all of them. But it didn't make sense during different markets for certain strategies. So there was a problem with the ability to deliver enough trades in each service. So what I love here is I could do whatever strategy I want. I created Mesh Prime, which is all my strategies in one place. So the best example I have is Palantir. How many of you have ever traded Palantir? Palantir is a great stock. We started off with Palantir where we did a diagonal calendar and we made hundreds of dollars. Then we got bearish on it and we just bought a put. Now, when sometimes we buy a call or put, we're willing to leg in, meaning if the trade goes against us, we'll collect premium against it, or we could get a quick return. Our options doubled overnight on the puts, and so we took them out at 100% return on puts. And then most recently, just yesterday, on Monday, we closed another Palantir trade. So last week when the market sold off, Palantir was looking strong. So we put on a credit spread. Then we found out why it was looking strong. And that's typically, as you all know, what happens. A stock looks strong. You don't know why. And then the good news comes out and it gets even stronger. So we recognized Palantir was showing strength. We put on a credit spread. Then it got added to the S&P 500. And we closed out the credit spread on Monday. We sold puts for 48 cents on Thursday last week. And on Monday, we bought them back for 2. Okay. So here's one stock that we traded successfully 3 different ways. We used the calendar spread, we bought puts, and then we did a bull put credit spread. And it feels really good to be able to attack different stocks with different strategies. Does that make sense to all of you? Okay.
Yeah, we got into Palantir in the teens, sold puts on it all the way up. If it occasionally dipped down, we would just turn it into a cover call and it would quickly get called away and we get back to selling puts. We rode it all the way up into the 30s. Like some of that was puts, so we didn't get full exposure, or a lot of that was puts. But yeah, it's been an excellent. That one is like the perfect stock for selling options on lately.
There's a lot. Yeah, they go different ones at different times. Before Palantir, Uber was great.
Yep.
There's so many fun ones to do, and that's what we like to do. So these are what my alerts look like. For anything I do, you get an entry and an exit. We spell it out for you. Here's what we're trading. Here's why. Here's the prices. We keep it in a track record. You could go on the website and see every trade we've ever made and why. And the alerts now are sent out instantly via an app, email, text, everything. And also in partnering with T3, they gave me a live trading room where I could go in for a couple hours each week, share my screen, and trade live with people, which is really cool. So this was one of the earlier Palantir trades that we made. We made a bunch of them. So since we started, we made our first trade in, I have the track record. I'm looking on another screen because I have the track record here. Our very first trade was May 8th. We went live. So it's only been a couple months. And right now we have 1, 2, 3, 4, 5, 6, 7, 8, 9 winners, 2 losers, and we've been crushing it. And by the way, we trade small, but our biggest loser, because that's always a big question, is minus $237. And then we've had a bunch of over $300 winners. I'll share the track record with you, but people have been really happy as we've been. The plan is to build up a portfolio during the summer months, like May, June, July, August, when it's slow. Have like a nice starting point. We're trying to like build up our account, get it to 10,000, and then we could be a little bit more aggressive. And so far, we're on our way to doing that, and it's really been great. So, yeah, these are just more trade alerts. So what I wanted to do, and obviously I save a lot of time to answer questions and things like that. I'll share my trading screen. I'll share the track record. But as I said, my goal is to have one community, one service where I do all the trades, and we're building up that community. We're over 100 people now, and every once in a while I like to do these events to invite more people in, because the stronger your community, the better ideas you have, the better everything is. Okay. And the nice thing is, though, and I want to say this because money is relevant to everything. I sold my business. I had the success. I had everything. It's kind of weird how I got it back. Jay knows the story. We won't get into it, but pretty much, they needed me to run it. And there were all these promises that were made. So I took it back and I got a lot of people with it. And so in order to be a business, you have to charge. But I'm also at a place where I want to try to get as many people in as possible. So if you took all the strategies that are in this service, it would have sold for thousands of dollars. Okay. But what we're doing now is we're making it under $1,000 so everyone can get in. When I say under $1,000, that's not for the month. That's for the year. Okay. So we have a brand new website with that app that sends out the alerts, which is awesome. Everything's gotten better. The team is still great. And the prices have even gotten better too. So what I wanted to do, don't worry, it's not $24.95. That was the suggested price. It's $8.95 for the year to join, and your rate will never go up. You get grandfathered into that rate. So if you pay now at $8.95, because eventually what happens is once we get to a certain number of people, you don't really want that many more. You're good. And so what happens naturally is it just gets much more expensive for anyone else to join. You try to price people out. Like when I used to do one-on-one coaching, I started at $3,000 and there were so many people signing up. It was so popular. I didn't have time. So I just kept increasing the price to try to discourage it. I got to the point where I was charging $10,000 for 8 sessions, Jay. I didn't even think that was a fair price. I just didn't want to do it anymore. And finally I was like, I'm just not doing it. Like people were paying that because they want the coaching. Now I do all the coaching in these webinars. I do live webinars every week. We share my screen. I have different guests on. We go over the market strategy and we put trades on a track record. So for this $8.95 for the year, it comes with complete access to our new virtual trading floor. You get all of our alerts. You get my insider call every Tuesday. And the link is adameshlive.com/prime. So if you're on here and you're not in it, which I think there's some people meeting for the first time, please join. And it comes with a 30-day money back guarantee. So I only want people with me if you want to be with me. So the nice thing is you pay $8.95. That works out to what is it? It works out to it's under $80 a month. And so like this last trade just paid for multiple months, and we trade really small. If you want to go bigger, you can. I said, it's really interesting. The people who've been with me for years, they don't need my teaching anymore. They just want the ideas, which is value by itself. Yep. But everyone who's newer or intermediate, that you get all the education. We do a separate education call, different events, plus all these trades, and it's all just one price. The reason why it's called Mesh Prime is because that's the only thing I charge for. There's nothing else to buy from me. So it's $8.95 for the year. It comes with a 30-day money-back guarantee, and I certainly invite you all in to join my community. We're building up a great track record, having a lot of fun, and I'm certainly doing what I love, okay? So the live sessions are Tuesdays at 11 a.m. We do a live session, and then typically it's either Wednesday or Thursday at 12 is when we do it. But we also do like after hours, like now I do interviews and stuff like that. So you get a lot of bonus stuff too. And everything's recorded, Tony, if you can't make it live. But the thing that's also important, and I will say this, is it is a lifestyle service. So if you aren't on a call, you could get the trade alerts afterwards and be okay. Okay. All right. What else we got? Oh, there's a number to call in, 212-774-5983 if you need anything. And I think those are all the slides. Now, good. We could go to Q&A, but I really want you to join and chat in. Let me know if you're joining because I like to see it and I like to welcome you. I don't know if I can see it here. But it's adameshlive.com/prime. And what I could try to Eastern time, Suzanne, Eastern time.
Don't you know that Adam's a New Yorker? Isn't it obvious?
Is it obvious? Let me see if I could go into home. I just want to see something.
Yeah. So the benefit of, of Adam getting his company bought, and even though he ended up buying it back, the benefit was that we got to meet.
Yes.
And now, I could throw in my recommendation here. I mean, I think Adam made the best point earlier. There's a lot of people in this industry that were kind of newsletter marketing people that learn trading later on. And I don't want to say that they can't do a good job, and I'm sure there are, but there's a lot fewer people who were traders first and then, learn the newsletter business at later. And I think generally speaking, those are the people you want to go with, right? The professionals who, may not be as refined as some of the marketing people, although Adam is quite refined. Not, I'm still pretty rough around the edges, but I try to teach good stuff. So I think that it's important to, you go with someone who has done it for a while and knows what they're talking about, but B, the community thing is so important, right? I mean, it's really nice to have other people you're doing this with, and it makes it a lot more fun. So strongly recommend checking this out if you haven't already.
I really appreciate it, Jay. I really do. And it means a lot. And I know you wouldn't just endorse anyone. That's awesome. So different Jay said that you have a call on Wednesdays. I most of the time try to do it on Thursdays, and I'll try not to. What time's your call on Wednesdays, Jay?
We have, I'm trying to think, Eastern time is, cause I'm on West Coast time. So I have to, 12 Eastern. And then that's the cover call one. And then the 48, and then the put selling one is at, 1:30 Eastern. So Wednesday's kind of my day for stuff, but we don't really.
Well, I'll either do it Wednesdays at 11, because we've been trying to get our feet wet with the time. The summer, it's been kind of chill. We've been doing like Tuesdays and then Wednesday or Thursday optional, but it will mostly be Thursday. And then who else? Sorry, Jeff, thanks for joining. Jesse, thanks for joining. Rick said this includes the multiple strategies. Yeah, all the strategies. There's nothing. It's not like you join and then there's something else to buy, Rick. You get it all. You're good for the year. Don't think about it again. Enjoy the trades. Okay. John, I have nothing to do with option action, so that wouldn't apply to me. So come on in. And what other questions do you guys have? I love answering a lot of questions, right? Yeah, sorry, it's live trading. Definitely a live trading. I'm going to let the questions come in really quick. Okay. And then also I could share a couple of things with you. But Jay, honestly, I do want to say thank you. Because you're a trader and not a marketer, it means more when you endorse, and I would endorse you too. And as I said, I think there's a bunch of stuff for us to do together, which I appreciate. And you and I are both doing what we love, which is cool. Rick, yeah, you could call Josh, or Josh gave you his number right there, 212-774-5971. Tony's going to try it, which is cool. I wish I could see. I can't see everything. But let me share my trading screen too. You guys want to? What would you rather see? You want to see the track record, or you want to see my trading screen? What do you want to see? I could go either way. Let me see if let me go track record first. Share screen. And then I go window. Trade portfolio manager share. Am I sharing this now? Can you see my? Yeah, there we go.
Yep.
So we keep track of all our trades here. So this Palantir trade is a great example. I definitely show my work. So when you go on it, you could click on it and you can see what we did. We sold the 29.50, 27.50 September 4th for 48 cents. And we closed them out on Monday for 2 cents. Now we did 4 contracts. And this is where I think it's really important to understand who we are and what we're about. And Jay, I think, you'll agree with this a lot. There's a lot of people in this industry who would just put 40 in there, because who cares? More impressive to show the big numbers. And you could say you made $2,000, right? But I don't want people trading 20 contracts based on what they're seeing from me. I like people to trade small because the bigger, better traders who feel comfortable with more money will normally go bigger on their own.
Right.
So the math on this is the more important thing. And I really want you all to understand the math to this approach, because it's what I'm proud of. First of all, you're entering trades with a 70 to 80% win rate. And at this point in my life, I'm not looking for headaches. I don't want to. By the way, I'm on my phone looking to get a calculator right now so I could do the math. I don't want anyone ever being like, "Oh my God, I lost $10,000." Like, it's not because of me. My biggest trade is down $200. Right? I consider this friends and family. What am I comfortable with? What am I comfortable with people following my ideas? So on this trade, right, 4 contracts. 29.50 minus 27.50 is a $2 spread. Times 4 contracts is $800. Okay, but we collected 48 cents. Humor me, we're going to call it 50 so I can do the math easier. So let's say we collected $200 off the 800. So our total risk on this trade was $600. Okay, the minimum you could have done it for was $150, one contract. Okay, $600 risk, and we made $184 in 5 days. So $184 divided by 6 is 30% on our money in 5 days. Okay. Yes, you get the alert, Suzanne, whenever the trades go out. That's really good. There's an 80% chance that you make 30% on your money, and you did. So this is a very conservative strategy. Now, you could do it the same way. If you would have done 40 contracts, you would have made, 40 times 46 cents, 4,000 times 46 cents equals, $1,840, but why would you do 40 contracts? Because then you're risking, $6,000. Now, I will say this too, though, and I think what's made me a better trader and better in this industry for all of you, Patrick, can you give Amelia the link to join? What's made me better is if this trade started to go against me, I wouldn't bail on it, but what I would do is sell a bear call above it. And you can't lose on both. So I would collect premium on both sides of the trade and reduce my risk. So that $600 in my mind was never there, because unless something crazy happens overnight, I'm always getting another 15, 20, 30, 40 cents and lowering that risk to under $400. So that's why when you see the trades, they're all small. But the common thing about credit spreads is that when you lose, your losses are bigger than your winners. And what I'm really proud of is, you could look right here. My biggest loser is $237. I have 372, 306, 248. My winners are bigger than my losers because of the way that we collect risk. We also win most of the time, so it's small, but it's risking, like, on the amount we risk per trade, this is up significantly. So what I love is that we allow you to get started small, build up your confidence, build up your portfolio, and go from there. But the goal is, right now I'm concerned with everyone coming in, building them up, catering to beginners and intermediate, right? My focus is going to change. My goal is at a certain point next year that I have this army of traders, these people on a quest with me, that we're on a journey, we're in it together, and it's big enough that I don't need to bring in new people. And now our size can naturally start to scale up. I'm never going to talk about compounding. Like, no one's ever going to do like 100, then 200, 400, 800 until you get to 1 million. That's silly. But if you go from 4 contracts and then we start going to 5 and eventually we get to 10 and we're really comfortable with each other, over time, as we've had success together, there's a new level of comfort. And that can only be developed by starting small and learning and feeling comfortable. So we got a while for this learning stage. And you can make money as you go. So you're getting an education, you're trading. But the goal will eventually be to take things to a next level. And then I'm going to stop that screen. And then I'm going to go to, oh, hello. I'm going to go to present, share screen. One sec. So here. All right. Now let's talk about Tasty. Do you also get access to Prime? No. Those are different, Bob. This is just my thing. This is the one thing I do for myself. So yeah. So this is now, Jay, let's talk about Tasty Trade for a second. I'm a proud brand ambassador for them. I've been with them for 5 years. I think I switched you onto Tasty Trade, right?
Oh yeah. Yeah. I'm a big fan.
What do you think of the platform?
It's great. I really like the fact that they cater to options traders, because you have so many of these platforms that are, hey, STS, we're in that one right now. Actually, we're about to make money. We just sold puts yesterday.
Really?
Yeah. Yeah. They were launching today. So,
Wait, which one? Oh, I've been in the 11. I'm not down 8,000. I just accidentally sold my stock one day and bought it back at 32. I've been in it since 11. You can see I sold the calls at 1750. I've done really well with the stock.
We sold the 22.5 calls yesterday because they were supposed to be launching today, and they did successfully. So it'll be a quick like 2% in 2 days. So that's yeah. So I'm a big fan of Tasty Trade. I think the stuff that caters to options, and also like they're really chill about getting in and doing margin and doing trades. You don't have to jump through all the hoops that some of the other brokers have. So just overall, just a really great platform for option traders.
Yes. If you guys haven't, this specializes in options trading. They have all these bonus referrals, and I am a proud and brand ambassador of them. I realize you use it, Jay. You've been happy with it. So here's a link if anyone wants to check out a Tasty Trade account, and you get bonus referrals and stuff like that. It's right there. Okay, so yeah, so this is my trading screen. This is where I trade on. This is the screen I share every week, which I think it's important for you to know. Okay, just give me 1 second. Okay, so let's say we wanted to set up something new in Palantir. We're not right now. There's so many different ways that we could trade it. And I'm not putting on a trade in Palantir right now, but let's say I was, and let's say I was bullish. Okay. Well, the market just ran up an incredible amount the last 2 days. So typically, here's how I would set up a trade in this environment. I wouldn't buy calls on a stock that already just went up 4 to 5 points. I'm being added to the S&P 500, and honestly isn't looking as strong as other things with the market higher right now. I'm also not going to go bearish into it. It just traded up on an incredible amount of volume. It's looking really good. So pretty much what I'm going to do is the easiest low-hanging fruit, which is a bull put credit spread trade. And where we do it, we're going to typically go out. Sometimes I go out 2 weeks. I like to go out 2 weeks, but sometimes I go out further, like 30, 40 days. Let's say we go out to October 18th. Okay. And then what I'm going to do at October 18th is I'm going to look for the 30 delta, which is between 33 and 32. If I'm more aggressive, I'll do the 33. If I'm a little bit more cautious, I'll do the 32. Now, the reason why you do the 30 delta is because that's the expected move in the stock. Over this time, it's expected to move $3.33, which will bring it down to 31.50. This is 33. Well, I guess this is 32, which would be 278, which is close to that 333. So the reason you sell at the 30 delta, it's the amount you think the stock can move but not go below. So I'd sell like the 33 put. And then it's all about comfort level for protection. I'd probably come in and do the 31 put. And this is a little bit aggressive for me. There's a 66% chance probability of profit, 81% chance of making over 50% premium collection. And And so on this trade, we'd risk $149 to make 51 with, let's call it in between these two, like 70% chance that we're going to be profitable. So you could get in this trade, risk $149 to make 51 if you're starting smaller. Easy kind of trade that we could set up. If I thought Palantir was going to run, well, now I might go out till November. I might buy the 34 because I want to be in or at the money. 35 is a little bit below. I might buy the 34 call in November, and then I would go out and sell the 30 Delta call for next week. I'd sell the 36 call for 45 cents and begin my premium collection process. Okay. Let me see. Right. And lowers the cost right away. Or you could leg into a strategy, right? Where, like, let's say I thought Palantir was going to explode up. Then I might just buy, the 35 calls. And if we got a pop in the morning and sell it, if not, I would probably sell a call against it and just turn it into a calendar spread. So many different ways to change it. Okay. So John just asked a really good question. John said it was an issue. It was an AtomS service called Phoenix and Options Money Machine. Do they still exist? All of those are in here, John. So Options Money Machine was credit spreads. Phoenix was calls and puts. They were all in Mesh Prime. Okay. Make sense? Okay. All right. So that's that screen. Let me just go back to stop share. And I'm going to share slides. Mesh Prime. Okay. So, Josh, is that number good for people to use? The 7745983. If anyone ever needs anything, you could also just email me, adam@adammesh.com, and I'll put it in the right hands. That's adam@adammesh.com. But it's fun to keep getting some new people in. Jay, I really appreciate your support with this. It means a lot. I will tell you, I was playing. My friend got me this hat. I don't want to get. I'm not trying to get political. I mean, I was playing at Trump National Golf Course today at an outing, and someone bought me this hat. I didn't even realize what I just put it on. But I was having my round of the summer, and I looked through the traffic, and I was like, "Oh shoot! If I don't leave now, I'm gonna be late for the event." And I left to make it here. And for anyone who plays golf, to leave in the middle of a really good round is tough to do. It was very hard for me to do, but my priorities are still here. Like a room full of people talking about the market, making trades together, building relationships. And it's really fun. Suzanne, I don't want to do peer pressure, but honestly, it's kind of like buying a pair of jeans or sneakers, right? If you know you're going to get it as soon as possible so you can start using it as soon as possible. You know what I mean? Like take it now, you'll feel good, and then you won't think about it again because your price will never go up. It's for the year. The average is under $80 a month, and you're good. Yeah, so there's no, Augusta, there was no access. This is brand new. No one could get access to this before. This is something new we created. Suzanne agrees with me. Patrick, send Suzanne the link. Suzanne's going to get it now. It's literally just buying anything else. And Augusto, what happened was before I got my company back, they had sold lifetime services for other things. I agreed to try to honor that to the best of their ability and give people things. But this was the new thing I started with my new company. And otherwise, I would have been fulfilling lifetime services for free because I didn't get the money when they sold those lifetime services, if that makes sense. And I try to be as transparent as possible about that. It's kind of hard to explain, right, Jay? Which is funny. Okay. The web address is adameshlive.com/prime, Jesse. Okay. But this is gonna be fun, Jay. I like doing these. I appreciate it.
Yeah, of course.
I gotta find more ways to do some stuff with you. You know.
Well, I'll be here. I'm not going anywhere. This is my passion. So.
All right. Thanks, Jesse. The trading, Patrick will send you the stuff. Okay. All right. Everyone else good? Everyone have everything they need? All good? Feel like we got a lot done. By the way, I booted Robbie off the call. I don't mind a little bit of interaction, you know? Like I'm fine for someone to ask a question, but it's such negative energy.
Yeah.
I don't need that in my life. And I felt amazing. I was like, Patrick, can you kick this person off the call? It was just like they were taunting. I don't know if it was a guy or a girl, but they were like taunting us the whole time. Like, oh, are you going to teach me anything? And we ended up getting into all the strategies and stuff. Yeah. And I usually do well if someone kind of comes at me, kind of gets me going, which like I perform better. But I felt like I'm at that point where I just want positive energy in my life.
Yeah, no, there's no reason for that, right? I mean, he's just disruptive, and it takes away from everyone else who's trying to follow the chat and all that. So I agree.
Bob, does this work on Thinkorswim? Yeah, I mean, so Tom Sosnoff created Thinkorswim, and then he left and created Tasty Trade. But those are, in my opinion, the two best options trading platforms out there.
Yeah, for sure.
I feel like there's all these extra people signing up right now, which is crazy because we're like an hour and 6 in. Yeah. So yeah, all right, I'll leave it. So do you guys all have the link? And guys is always affectionate for men and women. Or you can email me, adam@adammesh.com. I'll forward everything along. And good vibes. Thanks for everything. Thank you, Scott. And let me know how your son's doing trading. He probably doesn't do options though, right? He's probably doing stocks. Rick, we take what the market gives us. Some weeks we haven't put on trades. We're very, very selective right now. We have to have high conviction on our trades right now. That's how the track record's so good. And then as the volatility increases, we want to trade more. So we could go up to 1, 2, 3 a week. Right now it's a little bit less. And then sometimes we have positions overlapping too. But it's definitely of the lifestyle service. It's not a very like super active tons of trade service. Nor is it priced that way. It's $8.95 for the year, and you'll see you ease in. But like, there's going to be certain months that define the year. Just I don't think those months have provided the opportunity yet. I signed up for Tasty Trade. Great. Okay. This was a lot of fun. Jay, thank you for being here. I really appreciate it. Patrick, Thank you for facilitating everything. And all right, yeah. I'll see you guys all on the other side. Adam@adammesh.com if you need anything. Okay.
Thanks, everyone. Yep.
Thank you. Bye.